Welcome to the Capital Spreads weekly look ahead. Today is Monday the 23rd of April 2012. We've certainly started the week on the back foot. We're just softer in risk asset classes, FTSE lower, DAX in particular lower. And that comes as a little bit of a surprise. Over the weekend the IMF managed to secure a bit more of a boost to its reserves than was expected. But we've got off to a bad start this week, as mentioned. German and Chinese manufacturing data a little bit softer than had been expected. Certainly in the case of Germany, some really weak numbers there. And also there's a bit of uncertainty around the French general elections. There we now have confirmation that Nicolas Sarkozy will go head-to-head against his socialist rival François Hollande in just under 2 weeks' time. But there was a lot of popularity for sort of far-right and far-left parties, and it's unclear just how those people will vote when the two go head-to-head. And that's just causing a little bit of uncertainty in the marketplace. So FTSE a little bit lower, below 5,700, and the Dow is below 13,000. The risk aversion is causing euro-dollar to come off quite a bit as well. It's at 131.50, and that risk aversion is affecting the oil market as well, which is down below 118. That's for Brent. So that's it sort of today, the situation. How will things pan out for the rest of the week? Well, obviously Tuesday we've got, in the terms of corporate data, really the biggest highlight of the US corporate calendar is Apple's figures. This is a stock that's seen incredible appreciation over the past few months, but only just recently has suffered from quite a bit of profit taking, so they will be closely watched. On the economic data front, there's the UK public sector net borrowing number, which is expected to rise a little, but still mean that borrowing within the UK borrowing is within the OBR's target. We've got housing data from the US, and probably the highlight of the day, consumer confidence numbers. Now, they're expected to remain flat, consumer confidence in the US, but just a recent few surveys have started to hit some 4-year highs. So don't be surprised if we see slightly better than expected consumer confidence from the US on Tuesday. Wednesday, we've got GlaxoSmithKline reporting, and then the highlight of the day will be the UK GDP number. Now, if it wasn't for weak construction and industrial production, we would probably be looking at a rise of about 0.5%, because the services sector has been really rather strong, much stronger than has been expected. But because of that poor construction and industrial sectors, we're expecting, or the market is expecting, GDP just to rise, scrape a rise 0.1%, but crucially avoiding a technical recession. Then later on, the US FOMC meeting in the evening. Then on Thursday, we've got Barclays, AstraZeneca, Royal Dutch Shell and Unilever all reporting. And on the economic data front, there's confidence numbers from the EU, also inflationary data from Germany, and then some pending US home sales in the afternoon. Friday, probably another highlight of the corporate calendar this week is an AGM at Barclays. There they will be discussing obviously the remuneration packages for their directors, and in particular the CEO Bob Diamond. It'll be very interesting to see what sort of a revolt there is by shareholders, whether those packages will be passed to that AGM. So we'll be watching that closely. On the economic data front for Friday, really we've got again consumer confidence that we'll be focusing on, both in the UK and Germany. UK is incredibly low, really beaten up consumer confidence. It had that surprise drop last month when it was expected to rebound, so the expectations for a little rebound this month, well, we'll see what happens on Friday. And then we end off with US GDP numbers and the University of Michigan confidence data. So lots of things to consider, and we'll see whether the markets can bounce from this negative start. That's it. As ever, do give us feedback, media@capitalspreads.com.